Hello everyone, my name is Nelson Eridoma. I'm a forex analyst and we're starting a series on forex today. This is our first lesson, an introduction to forex. Alright, so if you're watching this video, then it's a kudos for you. You're going to be learning a lot from this video. Okay, let's dive right into it. So now, what is forex? Forex is a medium of exchange that began even before 1950, but became official in the year 1970 when they began to exchange currencies. Okay, but majorly forex began as a barter system, a system of exchange where goods and services were exchanged for each other. Somebody can have a product or maybe have a goods and can exchange it for another good. That was how forex began, and that gave birth to the bartering system of exchange, whereby goods and services were exchanged. Then we talked about trading of livestock, talk about skills and talents, talk about people, talk about salt and etc. So as you can see from the picture, you see people exchanging their goods for one thing or the other. So the whole idea began from exchange of goods and services, skills and all of that. That was how forex began, but majorly started in the year 1970 when the US started currency exchange, when the currency market was created by the US. So in forex there are major market participants. These are very crucial things you need to know as a background knowledge of what is forex. There are major participants in the market of forex. There are people that are involved in this exchange. So we'll talk about forex, talk about exchanging of currency. Majorly it's exchanging of currency, although we have commodities and we have other aspects that are being exchanged and with different forex markets and all of that. We majorly will be focusing on the exchange of currencies. Okay, so there are major participants that are responsible in exchanging of currencies. So for example, we talk about the government. The major participants in the exchange of currencies in the forex market are the government. Governments do business with government. Governments are major participants in the forex market. They are the major people when it comes to exchange of the currency, exchange of currencies worldwide, in the whole world. The second by central banks. Talk about the banks. There are major banks that are involved in exchange as well. Talk about our financial institutions which are also involved, our banks, our local banks. You talk about the hedgers, you talk about the speculators, then before you talk about the retail traders. So in all, there are about 6 group of persons who interact daily in the forex market. 6 groups of persons that interact daily in the forex market, of which the retail trader is you and I, who are part of the exchange, who buy one currency or sell the other currency. So we'll talk about forex. Forex is simply, in short term, foreign exchange, making exchange from currency to currency. And when we talk about foreign exchange, we talk about when a currency is being exchanged for the other, it has what we call a rate. It means it has a particular level or a particular amount the currency has to be that will enable it to be exchanged to the another currency. You're either buying one currency at one time or selling one currency at one time. This is what forex is all about. So we'll talk about foreign exchange, we'll talk about the rate that buyers pay in exchange in order to exchange their currency for a different currency. This rate changes due to supply and demand. The more there is supply in a currency, the more it is going to be sold. The more there is demand in a currency, the more people are going to come in to buy the currency. So foreign exchange, talk about forex market, is about buying one currency or selling one currency. So in all of these transactions, there are about $5.3 trillion dollars a transaction that take place daily. This is what forex is all about. You see that? So much money in the forex market. So, but we are not really concerned about the big number, but we're just concerned about how we can actually begin to trade this money and see how much we can get out of this money that is being traded in the forex market globally. Okay, so if you are still following me, please continue. Another thing I want us to look at is that in forex, talk about forex market, it is true that you have to buy a currency when it is low and you sell the currency when it is high. You know, in the law of supply and demand, when there is supply, it talks about there is sales. Okay, people sell it when there is supply. Supply means selling. Then when there is demand, people have to buy that particular item. When we talk about when there is demand for a particular item, meaning people are buying it. When there is supply, when there is a particular currency is being supplied, meaning people are selling it. Okay, so that is what the basic two things that are done in the forex market. You must understand this. You buy one currency when it's at the demand, then you sell another currency when it is at the supply. So you buy when the currency is low, you have to sell it, or you have to buy it, and when it is high, you have to sell it. So that is the major thing you need to understand. So giving you an example, let's look at, for example, in house flipping, buying a house for a little initial investment and then selling it for more than what you bought it for. Wow, that is great. You know, you buy it when it is low, you sell it when it is high. It's the same thing as buying a house when it has nothing. Okay, you can see the picture being displayed. This house has nothing. Now you buy it at this point, it has no value, but now you make it valuable, and then automatically you know the price will have to increase because it has increased in value. So you have to sell it higher than it is when it was low. So when it was low, you bought it as an investor. When it was high, you sell it as an investor to make money. So this is what we basically do in the forex market. It's about buying one currency and selling one currency. At one point, you buy one currency. At another point, you're selling another currency. That is what we do. So basically, let us teach you how to trade with confidence, because you need to learn the skill of trading. Trading is a skill. It's not just something you just go in and start doing. You have to learn the skill of trading. So until you learn this skill and the psychology behind it, psychology of trading, you will just be gambling, because you will not know when to buy, you will not know when to sell. And until you do this, you'll be playing a gamble, because you'll be winning, you'll be losing, you might not really win, you lose, you win, and all of those stuff. So you have to learn the act of trading, which is very, very important. So what is traded in the forex market? You need to know what is actually being traded in the forex market. Now, like I told you before, in the forex market, currencies are being traded. Although we have other markets, but essentially currencies are being traded. So we exchange one currency pair for another in the forex market. You know, it's not physical money. You're essentially buying and selling shares in different economies. It's just like you don't have to be in America to have the dollars, to sell or buy the dollars. You can be anywhere in the world and you can have access to the market, and you can, literally know after learning the skills, know when the currency is low and know when the currency is high. Then you buy the one that is low, then you sell the one that is high. So currencies are the major things that are being traded in the forex market. Currencies, we deal with currencies. So now let's go further. Now there are 8 major heavily traded currency pairs that you need to know and you need to understand. 8 major. There are major currency pairs that are being traded in the foreign exchange market. So the first currency that is traded, which is of course the total percentage, 85%, is the USD. Wow, you can see that the dollar controls majorly exchange in the whole world. So followed by the euro, and followed by the JPY, the Japanese yen, followed by the GBP, this is the Great Britain pound, followed by the AUD, the Australian dollar, followed by the Swiss francs, then followed by the Canadian dollar. these are the 8 pivotal major currency pairs that have been traded daily on the forex market. Although there are other currency pairs, which of course they are minor, but these are the major. We'll talk about major. They are the most heavily traded currencies. They are the economies that are standing out. Their economies are strong. Their economies are, you can actually be able to predict their economy and be able to make good money from them. So these countries and these economies stand out as the 8 best countries or currencies you can actually trade in their markets. Okay, because the foreign exchange market is made up of all the countries in the world. They are doing all the countries in the world. The currencies are traded in the foreign exchange market. But for these 8, they are the major. So you must know these 8 major currency pairs, and you must learn them and how to trade them correctly. That is very, very important. So they are the majors. They are the majors. For example, we'll talk about the major currency pairs, or the major pairing in forex is any pair that contains the US dollar is considered a major. Okay, so the 8 currency pairs, we'll begin to pair them with the US dollar, which is 85% of all trades. Automatically we have a major currency pair. So if you are asked what's the major currency pair, you have to tell the person, or to say that the major currency pair is a currency that is being traded alongside the US dollar currency. So the USD, that's the dollar. So when you are bringing 2 economies or 2 countries currency together, you automatically bringing in what we call an exchange. There's going to be an exchange when you bring 2 currencies or 2 countries currencies together. For example, you are bringing the euro in and you are bringing the dollar in to trade, to either buy one or to sell one. At that point, there's an exchange in buying one and in selling one. So, but when we talk about the majors, is when the currency is paired alongside the United States dollar, which of course constitutes 85% of all trades. So this is very important, and you have to understand this. So we also have what we call the crosses. Okay, the crosses are any pair that does not contain the USD, the US dollar. Some of the most common include the JPY, the Japanese yen, the GBP, the Great Britain pound, and the euro. These 3 currencies can be crossed alongside any other currency pair, and they give you the yen crosses. For example, you can cross the euro with the Japanese yen, you can cross the Japanese yen with the euro, you can cross the Australian dollar with the euro, with the JPY. All of these are the crosses, or rather the pairing of the foreign exchange market. So mind you, the 8 major currency pairs, when you begin to pair them together, okay, you have crosses. Then when you begin to pair them together with the USD, like we said before, you have a major currency that can be traded. So currency pairs, talk about the crosses. Any pair that does not contain the US dollar, some of the most, which include the JPY and the euro, are crosses. So you can cross any currency pair with each other, and you can buy one at one point and sell the other at one point. Once you bring 2 currency pairs together, a market is formed. There's already a market to buy and to sell. Okay, so you must know these 8 major currency pairs that are traded in the first market. The 8 major, which is the USD, the euro, the JPY, the Japanese yen, the GBP, Great Britain pound, the Australian dollar, the CHF, which is Swiss francs. We have the NZD, which is New Zealand dollar. We have the CAD, which is the Canadian dollar. So in our next lesson, we will look at how when these currencies are being traded, and how we can actually trade them. What constitutes trading them, and how we'll look into other things. Thank you very much. So stay tuned for the next lesson.